Joe, I knew this was coming, but today it's official. You actually sold Monster Beverage, and you bought DocuSign. It was just time?
Yeah, it was just time, and I think you're coming into the part of the year where what has been working is going to work very strongly, and what hasn't been working is not going to work. So out of Monster Beverage, it hasn't been working. Glad to get into DocuSign right here. I think it goes to Pete's point. It goes to the question you opened this show with, Scott, which I waited 10 years for you to ask the easiest question you were ever going to ask, and you asked it today to Pete. Resiliency all the way over vulnerability. That's the story in this market. It speaks exactly towards Pete's buy of Microsoft. It speaks towards the continued dominance of the FANGs. And last week, Scott, if you look at the performance, where was it? It was surrounding the consumer. Target up 7%. Home Depot up 5%. Those names were all incredibly strong. Lowe's up 6%. The consumer is resilient. They're investing and they're spending.
So then you would agree with that question I asked you, and I asked everybody on Friday, whether we're going to look back and say that last week was the week that crushed the correction. And that's why I think, you read between the lines, I mean, it's still nuanced, that Mike Wilson's laying the groundwork. Now, he's probably yelling at his television saying, that's not true, that's not true. But that language today, to me, was striking.
Okay, I'm going to look behind me at my whiteboard. 45.85, September 2nd, intraday high for the S&P. We take that out very soon. The bottom's in.
Wow, okay. That's a big call. Now, I do have interesting calls today on Disney, Shannon, that you own. And I'll tell you, I mean, the commentary around Disney, and it's a weight today, is negative. Downgraded at Barclays, the price target to 175 from 210, reiterated neutral at MoffettNathanson, the target to 180 from 185. Is it time to lower the DTC, direct-to-consumer subscriber bar? That's where the tone and tenor of the conversation is today on Disney. Are they wrong, Shannon?
Well, if you roll back 12 months, I mean, I think the DTC numbers were estimated to be much lower. And so there's been a significant pull forward on DTC, obviously, because of the pandemic. I think that there's been a lot of credit given to Disney's legacy catalog, and I think it's warranted. However, what we found is that there continues to be the need to produce new content that can give you a broader subscriber base. And that's what Disney's running into now, because they need to be able to bring in new, different types of subscribers. With that said, you know, DTC is the new business. The legacy business is the parks business, the branded business. Those are going to continue to do well. So I think this is a little bit short-sighted and overly focused on the DTC business. And I think that Disney's likely to continue to outperform on the long term, but they're going to have to get creative with their content.
It's going to be right in Disney's face this week, too, because Netflix reports earnings tomorrow.